Imagine living in a city where a modest apartment costs more than 14 times your annual salary. Welcome to Hong Kong, home to the world's most unaffordable real estate market for over a decade. But why is this happening? Let's break it down. Hong Kong's housing saga is a tale of boom and bust. This city of over 7.5 million people sits on just 1,100 square kilometers, with much of it being protected land. After the 2008 financial crisis, prices exploded, peaking in 2021. After some recent declines, they are now rebounding. The average price for a mid-sized apartment hit over $22,000 per square meter. To buy a small flat, it would take the average household around 14 years of their entire income. With the government controlling most land and new buyers flooding the market, prices are set to climb even higher. Stay tuned as we explore the key reasons behind these crazy prices. Ever wondered why owning a home in Hong Kong feels like an impossible dream? It's not just you. Let's break down the 3 core reasons behind one of the world's most expensive property markets. First, it's a classic case of supply and demand, but on steroids. Hong Kong's rugged terrain means only about a quarter of its land can even be built on. The government controls this land, releasing it in small, controlled batches. This has created a chronic shortage. Back in the late 90s and early 2000s, about 27,000 new private homes were built each year. Second, the demand is relentless. Hong Kong has one of the highest population densities on the planet. Add to that a constant flow of inward migration and wealthy investors, especially from mainland China, and you have a recipe for skyrocketing prices. In 2025, for example, their buying power helped push some apartment prices up by nearly 10% in a single year. Plus, because Hong Kong's currency is pegged to the US dollar, interest rates have been historically low, making it incredibly cheap to borrow money and fuel the market. When the stock market rebounds, all that pent-up demand explodes. Finally, government policies have unintentionally made things worse. Roughly half of Hong Kong's population lives in public housing. But wait times for these units have stretched to over 6 years, pushing many low-income families into the hyper-competitive private rental market. While policies like stamp duties were meant to cool things down, they didn't fix the fundamental supply problem. In fact, some restrictions on subsidized homes have actually reduced the overall housing stock, causing prices for smaller private apartments to shoot up by an incredible 239% between 2004 and 2021, while wages barely budged. These aren't just statistics, they have a real, human cost. The housing crisis has created extreme living conditions, with the rise of so-called coffin homes and nano flats smaller than a parking space. This deepens inequality, as homeowners see their wealth grow while renters are left behind. The frustration has even spilled into the streets, contributing to social unrest as young people find themselves unable to afford to start a family. Economically, the city is walking a tightrope. Household debt is massive, with mortgages making up nearly 60% of GDP. This makes the economy vulnerable to shocks. The high cost of living also causes a brain drain, as talented young professionals leave for more affordable cities. There is some hope on the horizon, with government plans to build hundreds of thousands of new units over the next decade. But without bold, systemic reforms, the dream of an affordable home in Hong Kong may remain just that, a dream. Thanks for watching. If you found this insightful, don't forget to like, share, and subscribe for more deep dives into the issues that shape our world.